everyone, Kim here with the Traders Club, twotradersclub.com. Welcome to the market update. Today is July 7, 2017, Friday. I hope you had good week trading thus far. Market continues to see volatility this week, and we've been anticipating it. I've been talking about on my market update that I continue to expect volatility, and we've been talking about 240 level that I was open-minded even back in early June, that I was open-minded for market to pull back to 240 and on Spider, and that's kind of what we saw here. And we're still in this kind of controlled manner. We're still in this kind of consolidational type of price action. You can see this is a actually constructive move. That's what you want to see if you're a bull in the market, if you're an investor in the market, is that market doesn't always go straight up, and we know this, yet everybody freaks out on every pullback. There's always a crash coming when the pullback happens, but market is going to get up and then it's going to pull back. And when it pulls back, a lot of times it kind of gathers more strength, or it kind of rests a little bit, or it digests its gain before moving higher, right? Kind of like when we're running, we run and we slow down or we rest before run up again. So that's kind of what market is doing. Obviously looking at more of a primary intermediate term, we are in an uptrend and it's healthy, well intact, and it's valid, right? But looking at more of a minor term, a micro term, yes, we're in this kind of a mess. We're kind of in this downtrend. So I will kind of categorize today's market sentiment as more of a minor term, neutral sentiment, as we're getting in this kind of a consolidation. This is where swing traders, short-term traders, even day traders, it is difficult for them. This is how the market would slaughter them, right? Trying to pick bottom, pick tops. I mean, can you imagine? Oh, it's going down, oh, it's going up, oh, it's going down, oh, it's going up, oh, it's going down, oh, it's going up, oh, it's gonna crash, oh, it's going back up, oh my god, it's going to 220, 230, oh, it's not, we gapped up, oh my god, it's going to 248, and then it flushes, oh, it's not, and then, oh, do you really want to live your life like that? I sure don't. That's not how I don't think anybody should trade this market, and I think that's why you are listening to me here today. So anyway, looking at Spider, obviously we are in an uptrend. We're in a primary term uptrend. We're intermediate term uptrend. We just established this uptrend support here, which is coinciding with the 50 MA, which I've been talking about for months now. 50 MA has impressive resume. It acts as strong support here and here and here, and you pay attention. Does that mean that it's 100% guaranteed that this thing is going to find support and then it's going to go all-time high to 248, 250 in next few weeks? No, nothing is guaranteed in the stock market. We should understand that. It just means that that's a potential level of support that we should watch. And if we do find support in that vicinity, that's potentially a strong support. And if we see substantiation from the price action that reflects the possibility of support, which we're seeing today, obviously one-day action does not establish a trend. How many times we saw potentially what could look like a strong support that failed, right? That 20 MA gap up, follow through, strong bullish move that has failed and came down here. So we're right on that 50 MA. We have what it looks like potentially be a one white soldier, this gap up bullish move. But again, we need more than that. So if you're a buyer here, what you want to see is you want to see this thing breaking out of this level. I think the best way, without much of a headache for the buyers to just kind of break higher, is that maybe on Monday or Tuesday we just gap it up and just go, right? If we can see something like that, we can get up here and fill the gap, and then we're probably going to pull back. Again, those gaps are always going to make things a little bit hectic in the minor term, and then move higher. If we can see something like it. If not, if we start to fizzle here, if we start to grind higher to the upside, then we're probably gonna, there's a gap here, probably fill that gap and then kind of hit this resistance here, downtrend in the minor term, and then kind of possibly pull back. So we got two gaps. We got downside gap that's still open is this gap. We got upside gap that is still open is that gap. Okay, so this is how it's gonna be. If we keep this gap open next week, there will be some minor term buying pressure that could come into the market to bring the price back up. However, if we fail to fill this gap early next week, then what could happen is this thing could come back down and challenge this gap area. So those are the two levels you want to watch. And the moving averages are confirming that those two levels are important levels. You can see 20 MA, it's just been, so 20 MA, we're kind of sandwiched between 20 MA and 50 MA, right? So 50 MA, you can see that, again, we've just talked about just now that earlier, that 50 MA has been acting as strong support. So that's the level. 20 MA, it has been recent pivotal level, right? You can see that 20 MA acting kind of a resistance and support here just last couple of weeks. So that's where the 20 MA is residing. That's where the 50 MA is residing. Those are two levels where we have a gaps. We got downside gap there. We got upside gap. So those are two levels to watch here in the minor term, in the micro term. See how it plays out, and then we'll go from there. If we do lose 240, then there's a chance they could come back down to 230, 239. But personally, I don't see this thing getting any below than 239, 238. I think that's the kind of the last level before we find support. We have 100 SMA residing in that vicinity, hovering in that gap area. Isn't that interesting? We got 20 MA in that gap area. We got 50 EMA in that gap area. We got 100 SMA in that gap area. So I think if market does see much decline next week, then 239, 238 could possibly the last level support before bouncing back up. I personally don't see Spider getting any lower than that level. But if we do see some kind of substantiation with the recent today's bullish move, with this gap up move, and then possibly gap it up and make it into an island reversal, then I think that this thing will break out of this kind of a 1 month bull flag consolidational pattern, and then starts to resume back up. Again, my target still remains the same, 248 and 250, as we are still in this kind of a bull flag consolidational pattern. I do think that once if this thing does break out, there will be a kind of a fast up move. Let's look at Dow Jones here. Diamond, we're hovering above 20 MA. You can see the 20 MA. Diamond is actually holding up quite well. You can see Spider is actually at 50, but Diamond is, or at least retest the 50. Well, Diamond is holding above 20 MA. So Diamond is much, much stronger. Actually, minor term sentiment is actually bullish on the Dow Jones. And that's a good news for the equities here. At least Dow Jones Industrial Average is holding up quite well. Let's see how it plays out here. Russell 2000, obviously, we did see a kind of a big gap down yesterday to shake more people out. We're still in this range bound. This 6-7 months range bound. If this thing breaks out of this range bound, you're going to see Russell 2000 leading the entire market. I remember we're still in a strong bull market. A lot of times when the strong bull market gets established, it's gonna be the Russell 2000 that usually leads the entire market. But before it leads the entire market, it's usually the Russell 2000 that gets into kind of a weaker sentiment, right? And so you see what happened to tech. The Qs, they got up a lot of these FANG stocks, they rallied higher with it, and then these stocks starts to come down. While the Russell 2000 just been consolidating, because a lot of times what's happening is a lot of the money is following the leaders like Qs. So now that Qs has already had this move, what could happen is maybe the Qs or these FANG stocks or these tech leaders could start to get into a consolidational pattern like Russell 2000, and then the small caps starts to see some money rotation that towards into the small caps, right? Because small caps has beaten down. There are sectors like, you know, retail sector, energy sector, and the small cap. Those are the sectors that has not seen much of move. So what could possibly have, think about it though, if you have a lot of big money, if you're a big fund managers, that you had this great rally on the Qs, you had a lot of money on the Qs, what you want to do is now you understand that, I mean, yes, Qs could keep grinding higher from this point on, but the probability of seeing another big move on these leaders is lower than these beaten down stocks. I mean, Russell 2000 hasn't been beaten down. I mean, Russell 2000 beaten down sector like, you know, like energy sector is definitely beaten down. Like retail sector definitely beaten down. But Russell 2000, I mean, by no means, it's not beaten down. We're consolidating. We're still in an option. We're above this all-time high. We're holding above it, as you can see right there. There's a prior resistance acting as potentially new support. We got where we have this uptrend here. This hasn't been beaten down. We just kind of start pausing. We've been just kind of consolidating, which is a good signal. Kind of wait on the money to flow back in for possibly much bigger move on the Russell 2000. I think once this thing breaks out, man, 150 is easy. I'm targeting 150, 155, 160 on the Russell 2000 as I'm holding all of my code position. I have not closed any of it. So that's kind of thought process there with the Russell and you know, how the whole how this money is rotating. And you have to understand that when money rotates like that, it is healthy for the market. It prevents market from crashing. If all the money gets pulled out, it gets pulled out from energy sector, it gets pulled out from the bank sector, it gets pulled out from the retail sector, it gets pulled out from the Russell 2000, it gets pulled out from Dow Jones and the S&P 500 and the NASDAQ. That's when you see this distribution throughout the market. That's when the market crash. Market does not crash just because the tech sector is weak. A lot of times when they all start to see these weakness all throughout the market indices, that's when you start to be concerned about the market, not when you see a money rotation. Money rotation occurs in a strong bull market, right? So Russell 2000 average, looking at a minor term, this is a Fibonacci I've drawn here. I also posted my journal update yesterday. You can kind of read that, but this was the first level fib, second level fib. We're near the 50 MA. The thing about this level here, looking at the 50 MA, the thing about the 50 MA is very interesting to note that back here, well, 50 MA was kind of sloping down a little bit, and it was kind of a falling, right? It was kind of a down sloping. And even when we had this move, when we pulled back, 50 MA was pretty much in this, you know, flatlining sentiment. You see that on that 50 MA, that pink dotted moving average? Well, today, as we start to see volatility on the Russell 2000 here, IWM, 50 MA is actually still rising. Do you see this? What that tells us is that intermediate term sentiment and the pressure is a bit more bullish than back in May and back in March. So this gap though is gonna make things hectic in the minor term. But if buyers can somehow figure out how to maneuver through it, I think the best way would be go up and fill the gap, pull back a little bit, and then move higher. But if the buyers can able to maneuver through this gap and nullify this downside gap down pressure, then there's a good chance that this 50 MA could be the tail before this thing breaks out. And again, once this thing breaks out, this thing is going to fly. But if this thing does fizzle and start to move to the upside and then grind higher and then fills a gap or fails to fill the gap, there's a chance it could continue lower. And at that point, then you'd be looking at 50% retracement and 100 SMA, some of these vicinity here, 138, 137-ish level. So so basically the Russell is showing us intermediate term. a kind of a bullish sentiment, minor term, a little bit more bearish sentiment. And we're still in the 6-7 month consolidation. See? So let's see what happens next week. We'll revisit and we'll follow up on it. NASDAQ did see some cues here. Did see some support in this horizontal resistance after breaking below this rising pivot. We do have a little bit of Morningstar reversal here. You can see right there. Gap down, gap up. We got this high wave spinning top. And then we have kind of a bearish, long bearish candle, and then we got the bullish candle. So we got kind of a 4-day, 5-day Morningstar reversal. That pattern is only minor micro term pattern that could potentially gap back to this level here. But here's the thing: the problem with NASDAQ is this rising resistance right there. Well, that could become, or the rising pivot, that could become as new resistance. That was strong pivot, right? It acted as resistance here and here, and then became support here and here and here. So gets up, maybe meet with this resistance, fill this gap, and if the best way, if NASDAQ grinds higher, right? It continues higher to the resistance of that pivotal level, and then if it gets rejected, the repudiation occurs and it falls back. Then that could be a problem. That could be a problem that it could come back down to 135, maybe even lower, and break this trend line. But if this thing fizzles up and it gets to a resistance level and it either like thrusts higher or gaps up, something like that, and makes some kind of an island, I think that NASDAQ could grind higher and completely nullify this potential head and shoulder formation. Also, I talked about possibly, if it does something like this, left shoulder, head, right shoulder, that also could be inverted head and shoulder. There's a lot of things that can still going on here. This is not an easy business to just say, oh my God, there's a head and shoulder formation. Oh my God, it just broken below this this rising resistance. Yes, this thing going to 127. Like, why? Like, why would you assume that? This thing is still in a strong bull market, and this thing has run up a lot. That does not mean just because it ran up a lot, it means it's gonna see 30% haircut or 50% haircut. We're probably not gonna see something like that. It's more likely we're gonna see some kind of head fake here. We're more likely we're gonna see some kind of reversal pattern here. But so some of those things are possible scenarios that have depicted that could be possibly playing out next couple of weeks. But again, we'll revisit next week here. Banks are strong, doing well. We have the stair step going. This is what I'm talking about. You see this head and shoulder formation that everybody talked about. What happened? We threw inverted head and shoulder. We just completely nullified left shoulder, head, right shoulder, inverted head and shoulder. This was a neckline. It got up here, came down, boom, right? So banks are doing well here. Maybe a little bit of bull pennant. So 50-50 though. It could break up, break higher, maybe 55-45 because we're in an uptrend. But we had this bull pennant pattern here. This thing failed, right? So we got bull pennant here. Maybe this time we'll make it. Maybe this time it won't. I really don't care at this point. We're still in an uptrend. Banks are strong, holding up well here as the S&P 500 has been in consolidation, kind of maybe waiting, kind of a waiting game here, maybe waiting for S&P to catch up. But once S&P breaks out, once Russell 2000 breaks out, probably a lot of these sectors are going to move up with it. So that's kind of what we're looking at here. Banks. I'm wondering if I should go through some of these. Kind of getting tired here. I just did a member video for like 1 hour, so my neck is starting to hurt. I'll go through them quickly here. So let's look at FANG stocks, including Tesla. You gotta, look at this. This is a level that we've been talking about here, this rising channel resistance level here. So watch out this level. This is a very, very important level here. So this has been acting as strong pivotal level. It's a prior resistance now acting as support. And it's interesting to note that 50 MA been acting as strong support there. Keep in mind though, if we lose that level, you see last time, similar thing happened here. We talked about this last couple times. We held above it for a little bit. Once this thing lost, this thing plunged. So if thing does plunge, I think that's a good level to buy. There'll be buying opportunities if this thing does plunge. But yeah, so that you see this right there above this rising pivot. So that's where we're at. So we're still at that rising pivot. Otherwise it continues higher or this thing plunges back down. But holding up so far. Let's look at Apple. Apple also holding up above this neckline. We've been talking about this neckline here. So this is the head and shoulder neckline, right? So left shoulder head, right shoulder. Again, we're holding that level. We've got some gaps that are still open. We got some of these moving averages coming together. 50 MA still declining, 20 MA still declining. So the pressure's on for the investors here. If we do lose this level, coming down, retest, and then gets rejected, then with that repudiation, this could come back down to 134.28. However, if we kind of start to fizzle and make its run, then there's a possibility it needs to kind of reclaim those moving average, and you want to see 20 and 50 MA kind of backing up the price action. You want to see price action substantiating these moving averages, where the moving averages kind of, you know, rise higher. But I think above 150.33, be cautious on Apple here. We are dealing with monthly chart overbought sentiment. We do have a monthly tweezer top on the monthly. It's engulfing also. It's engulfing tweezer kind of pattern there. So, you know, that's tweezer. That right there is similar to right there. That was a tweezer top. That's an evening star. But I think, I think a lot of people are thinking, oh man, it's gonna come back down to one, you know, picked out this. I don't see that actually in Apple. As I look at my other time frame charts, like weekly, and as I analyze a little bit deeper on Apple, and I talked about, I think last week, that I don't see that coming all the way. I think there's a good chance it's come down to fill this gap, or not fill that gap, but maybe retest recent high right there. So 134, 132. 46-ish level. We got a little bit of uptrend support in that vicinity as well. You can see we've got 200 SMA residing in that vicinity here. Let me make this a little bit more convenient for you to look. You can see right there we got the support. We got 200 SMA residing in that vicinity, and this is a prior resistance, prior strong resistance, that prior peak. And if I throw a Fibonacci here to here, I bet this is certain level. This is probably about, you know, couple levels of my FRG. So that's a level to watch, and I'm going to be watching to engage if we do see a pullback. But if it does kind of grind higher, then a lot of things could happen. A lot of shenanigans could happen, so just watch out for that. Let's look at Amazon. Amazon holding support above 50 MA active support here, 50 MA acting as support. Currently just below 20, above 50. Kind of sandwiched between. Double top, not sure yet. We got this neckline here. The neckline, if neckline breaks, then we'll probably come down to 925. If not, then if we gets above 20 MA, it could continue grind higher. But it is oversold on the monthly, but we don't have any engulfing pattern like Apple. Amazon is actually could be a it could be more of a consolidational kind of a candidate where this thing consolidates and then get. A lot of times that's what kind of Amazon does. It kind of get into a consolidational phase. Let's see. Like even here, we had a big move, and then it kind of consolidated a little bit, and then moved higher. I mean, this one right there, kind of consolidated, kind of moving higher. But yeah, I mean, it could be something like this before moving higher. And obviously, at this point, as high as Amazon, this is not a level that I'm gonna start putting in fresh new position. But definitely, if you've been riding this, maybe, you know, this is a level to start lightening up, maybe hold remainder and just to see if we can get some movement. That's the strategy there, I think, on Amazon. Netflix has broken key levels, and we are now cultivating minor term. See, this is what I'm talking about. We filled the gap, got hectic, came down here. That's why these gaps are always hectic for the short term sentiment. So what happened is now we got lower high and lower low. We filled this gap, so we got both gaps got filled. So this gap got filled, became a resistance. This gap got filled, becoming support here. So now this is important level right there. So we got this, we bought broken below this channel, right? So if this gets up and then gets retested and get rejected here, there's a good chance this thing coming back down to retest this level. Unless we get up, buyers don't want to deal with that, we gap it up and then come back down to this resistance. So this is kind of a pivotal level we're looking at here. 10, 20 and 50, they're still, they're falling, right? The 20 is falling, the 50 is falling. 100 SMA is kind of flattening out here. That tells us the minor to intermediate term sentiment is bearish. Kind of a longer term trend is slowing down as the 100 SMA is kind of flattening out. 200 SMA is still rising, so the major primary term obviously is still bullish, but we're just kind of struggling a little bit here in the minor to intermediate term. Let's look at Google. Google, we got back down to this level here. The gap up area acting as support. We're getting back up. This is a resistance. This is a neckline. You got head and shoulder, get up, you get rejected at that neckline. Good chance we come and fill this gap, at least retest at 100 SMA. But if there's a chance we get up here, continues higher, pulls back, and then do something like that, that's inverted head and shoulders. That's how Google can nullify this, negate and nullify this head and shoulders, and then continue move higher. So we're getting into that kind of important pivotal level in that vicinity. Let's see how it plays out here. Tesla did lose a lot of its ground. We broke a lot of this uptrend support. We are finding a little bit of support on that 100 SMA. See that support broken with the gap down. That support is also broken. If we lose that 100 SMA, this thing probably could come down to about 287, 276. This is the vicinity I might be looking into possibly engage if we do come down here. We got gap here. Crap. Let me put that in here. There's a gap, two downside gaps. So there's a chance it could get up, fill the gap, but there's that uptrend support could possibly act as new resistance before falling back, unless this thing kind of gaps it up, makes it island. If we makes it island, there's a good chance it will get back up to fill the gap at 249. But that's a kind of a straight down move a little bit. But that's, when I actually look at Tesla on the monthly chart, I mean, that's a normal thing. I mean, you get a kind of shoot up here, and then we'll pull back for a few months. We get a shoot up here, we'll get a full pull back there before moving higher. I do think that if we do come back down, retested it, then there's a good chance we'll get up to 450. So let's see how that plays out. 287, 278, 287, or 287, 278 is a level that I'll be watching to possibly engage there. I want to quickly look at silver, and I want to let you guys go. Silver is tanking at this point, but silver just made new low. And gold and GDX, they're not doing so well either. So we just filled this gap. I mean, that gap, I had it for longest time, and I've been talking about it in every, my market update that you see, this is a thing. I just hate fighting a downtrend. It's a difficult to fight a downtrend here, but now we made new low. We got low, lower high, low, lower low. And this is now starting to look very hectic for the buyers. So many gold pumpers. A lot of these gold pumpers, what they are is they are selling gold in their website. So they pump gold because they want you to buy physical gold. And then they'll tell you how these war, if the North Korea, the war, when that happens, the gold and silver is going to skyrocket. I mean, they're going to keep luring you in with this kind of stuff. But how do we know when the war is going to start? Right? I mean, do you really want to it's almost like these guys want the war to happen so they can profit. You see how these people mindset is? How many innocent people are going to die just because you want to make some money on your stupid gold and silver? You can't just hope that the war is going to break out so you can make money, so then innocent people is going to die. You know what I'm saying? Just why I hate these pumpers. I hate these people. They're selling physical gold and silver, and they're just always pumping that the whole market is going to crash. They always have a new story, right? The whole market is going to crash in 2015 and 2016. Therefore, you should invest in gold and silver. It's going to be infinitely. It's going to gain in its value infinitely. Right? Well, the whole stock market is going to crash. I mean, these guys have been saying this since 2015, 2016. They keep saying it. It's crazy what these people do. Anyway, yeah, so that's it for me. You know, hope you guys enjoy your weekend, and good luck trading next week.